This is the Demystifying Crypto and Building Wealth podcast.
I knew that would be worth trillions.
That had never existed in human history. There's been massive opportunities.
The #1 podcast to help you understand and get insights into the crypto world, blockchain technology, wealth building, and financial investing. Now, here's your host, Tico Tawari, the world's #1 most trusted cryptocurrency analyst and Wall Street veteran with decades of experience in the financial space.
Hello, friends, and welcome to this week's IG Live. It is going to be an interesting session as we talk about what's going on. There's going to be some surprising stuff happening here that I think are going to catch people on the wrong side of things, and I'm looking forward to talking about that. Okay, so I'm going to get things kicked off here, I'm going to... So there's a few things I want to talk about. First, I want to get macro and talk about what's going on just on the bigger picture. And then I want to talk about BTC, and then I want to talk about something that's happening that I think could really change the whole game. So let's just talk macro first. So right now, the stock market is down. The VIX is moving up. There's a little bit of panic coming into the market. You can just kind of, taste it at the tinge. There's like a tinge of like a little metallic taste at the back of your mouth that you get, when danger's about to hit. So I would not be surprised to see the markets be pretty sloppy this week, including crypto. I think it's going to be a pretty sloppy week. And the big fundamental reason behind it is that people are afraid of higher interest rates. If you look at the 10-year yield, the yield has just been ripping higher, 4.25%. So this is a huge move from where we were. Let me just pull up the 10-year here real quick. So the 10-year Treasury. So the 10-year Treasury was down in September at 3.6%. It's now trading at 4.25 and looks like it's going higher. So for those of you that, aren't really familiar with how interest rates work, you might be thinking, well, I thought the Federal Reserve is lowering interest rates. Why are interest rates going up? So the Fed only has control over a very small part of the curve, the yield curve. And that is the very short-term end of the yield curve. And when I say the term yield curve, what happens is that at different... So let's say you have overnight debt, 30-day debt, 90-day debt, 1-year debt, 2-year debt, 4-year debt, 5-year debt, 10-year debt, 20-year debt, 30-year debt. And those interest rates that the market assigns to each of those maturity periods creates a yield curve on a chart. Now, typically, if you lend money to somebody for a longer period of time, you get a higher interest rate than if you lend money to somebody for a shorter period of time. But there are instances when that will reverse, and that's called a yield curve inversion, which I'm not going to get into right now. But the thing that you need to pay attention to is what's going on at the long end of the curve, specifically at the 10-year yield. Why is the 10-year yield going up? Because theoretically, it should be going down because the Federal Reserve is lowering interest rates. So does anybody here know or have an idea why the 10-year is going up and what that is saying to the rest of the market? And if you don't, that's okay. I'm just trying to, the purpose behind me doing these IG Lives is to help you get better at analyzing markets rather than me just pontificating to you. So what's happening is that the bondholders are getting worried that there is too much government spending and that the value of the dollar is going to decline at a higher rate than normal. They are afraid that there's going to be inflation. And so bondholders are saying, if you want me to hold your debt, I'm going to need a higher rate of interest. And so what they're doing is they're selling their 10-year bonds. And when you sell your bonds, right, the bond price goes down, but the yield goes up. So that's what the 10-year Treasury market is telling us. It's telling us that it's afraid of inflation. And so the fear is, as the 10-year yield goes up, you might start seeing interest rates in other areas of the curve go up. And if we look at that right now, we can see that even though interest rates have dropped 50 basis points, they're still pretty high across the curve. 6-month rates are at 4.5%, 1 year at 4.2, 2 years are over 4.7, 10 years at 4.2, and 5 years at 4.5. Now, this is a huge deal for the federal government because we're now paying more in interest expense than we are on national defense. And so if interest rates go too high for too long, it can essentially fundamentally bankrupt the government. So the Fed is in a tough place because everybody is expecting them to lower rates another 100 and 150 basis points. But the bond market is saying we're really afraid of inflation. And so if the Fed drops rates in an aggressive way, it might spark up inflation and then cause the yield curve to steepen even more, where long-term rates go up even higher. And when long-term rates go up higher, when I say long-term, let's talk about the 10-year yield. Just about everything in the United States that has an interest rate attached to it keys off the 10-year. So if the 10-year spikes, that means mortgage rates go up. That means credit card rates go up. The cost of capital for everyone goes up. And when the cost of capital goes up, it slows economic growth. People don't borrow as much, people don't spend as much, companies don't borrow as much, companies don't spend as much. So the cost of capital is incredibly important. So Wall Street is freaking out a little bit about this right now, and that's why equities are selling off. So that's kind of like the big macro picture as to what's going on right now. So, what's the way through this? Well, we know that if inflation does continue moving up at a higher pace, we have the best inflation asset in the world. We own Bitcoin. In my opinion, there is no other asset better than Bitcoin when it comes to protecting yourself from the ravages of inflation. But here's the thing to remember about Bitcoin. When the spaghetti hits the fan, everything goes down, including Bitcoin. And then when the government comes out with their policy response, which is invariably some form of money printing or stimulus of some kind, Bitcoin then outpaces everybody else. Don't be surprised if we see some volatility here in equities. Don't be surprised if we see some volatility here in Bitcoin. Remember what I've been telling you since the beginning of this year. For your trading stack, you're going to buy the dips and sell the rips. Remember last week we were trading around 68K. What did I say? I said if I'm trading Bitcoin, I am not getting long at 68K. In fact, I would take profits here at 68K. So where are we right now? We're trading at 65 and change, around 66,000. So remember, we have our core stack and we have our trading stack. I think we're going to have an opportunity to buy some Bitcoin cheaper. I'm looking at the charts here. It's tough to say where we're going to go. You've got that first round of support at around 64, 65. If that doesn't hold, the next round is between 60 and 62, somewhere in there. I really would not want to see a break below that, or if we did, you'd want it to be quick. You would not want to spend a lot of time below 60K. So we'll have to see how we go from here. Here's what I know: Bitcoin makes it difficult to own. Bitcoin will always act in the opposite direction of where most people's sentiment are at. So when we were trading at 68K last week, everybody's like, oh, we're breaking out, we're going to new highs. And I said, look, I don't think so. I'm the biggest Bitcoin bull out there, but I don't think so. I think we're going to get a pullback. So, hopefully you took some profits last week. I did on my short-term stack. I hope you did too. Now I have liquidity, and for me, I'm just going to wait and see where this pullback takes us. How far are we going to go? How violent will it be? Maybe it won't be that violent, but let's see. Remember, the most amount of money you're ever going to make, at least on the trading side, is when it's the most uncomfortable to take a position. right? So we haven't reached that point yet. It's still like, oh, Bitcoin's only down a little bit, right? No one's retching on their keyboard yet. No one's panicking yet. So that probably means that you want to wait before putting on a trading position in BTC right now, and in most of the alts. You want to wait. The other thing that I want to talk about, and this is probably going to catch a lot of people by surprise, because I'm not a political person. Let me just be very clear. My work is for everyone. I'm an American, and I work for Americans. Yes, I work for everybody in the world, but I work for people. Okay, my readers are Republicans, my readers are Democrats, my readers are independents, my readers live in foreign countries. I am united in helping my readers improve their financial life, period. Now, why have I given you that big disclaimer and that big premise? Because for the first time in my career, I'm actually going to make a political prediction, and one that I think is going to have a massive, massive impact on the crypto markets. So next week, Wednesday, October 30th at 8 p.m. Eastern, I'm going to do a special live event from here, from my office, because there's so much that's happening, and there's so much that's changing, and the data is changing so quickly. I won't have everything in place until then. And this, obviously, like any election, can go one of two ways. And so we have scenarios for either way. But on October 30th, I will have all the data in place to make my definitive prediction of who's going to win, why it matters. And you might not like my answer, but it's not rooted in politics. It's rooted in making you the most amount of money possible. And the most amount of money that you can make right now is not going to be in the stock market. It's not going to be in commodities. It's not going to be in real estate. It's going to be in crypto. So look out for that. If you are not on my list, you should get on it. Go to tawariresearchgroup.com. I publish 3 times a week. I would imagine everyone here is already a subscriber to my free e-letter. And then you will automatically be enrolled to receiving emails that'll invite you to my event next Wednesday at 8 p.m. Eastern. Again, I hate talking about politics. I hate even getting political. And I know that when I make this prediction, people are going to get mad at me. But again, remember, this is not about me taking a side in this political fight. This is about me taking your side to make sure that you are on the right side of what's going to happen on November 5th, so you're positioned to profit from it, not get victimized by it. And that's really what matters. I remember years ago, I had a friend who is a staunch Republican, and he stayed out of the market when President Barack Obama was in power. And there was enormous money made during that period of time. I remember writing about the amount of money that could be made in healthcare stocks. And I said the same thing. I said, look, whether I agree with somebody's politics or not, that's not my job. It's not even my job to have an opinion on that. It's my job to have an opinion on how we can make money from whoever is in power. And my friend, he left so much money on the table during that period of time. Another area that actually did incredibly well under President Obama was with defense stocks. And I remember, I'm like, Joe, you got to buy Northrop Grumman. The defense spending is going to go through the roof. You have to go buy. He's like, nope, no, Obama's in office. I'm not buying any stocks. And I just said, Joe, all you're doing is hurting yourself. So friends, I understand during a political climate, and especially during a political race like this, which is so polarized, we can really get into our opinion of what is right and what is wrong. And I'm not asking you to change that. Have your opinions, but don't let your opinions impoverish you. Because at the end of the day, right, no matter who wins, that politician is going to make millions of dollars a year. They're going to their life is fine. Their children's lives are fine. Do they care about us individually, the individual person? No, that's our job, to care about our families, our financial future, and to make sure that we are in a position to win to the maximum ability no matter who is in power. But the person that is going to take the reins of power next in the United States is going to have a huge impact on the crypto markets. And I can't wait to tell you all about that next week. Okay, so long story short, do not be surprised if we have volatility this week. The areas to look for on BTC are 65 and 62. For me personally, the area that I would really be most excited about is between 60 and 62K on BTC. Look, could we wick down to 55K? Yeah, I mean, it can happen. This is Bitcoin, right? Anything can happen. So if I was doing this in 3 tranches, I'd probably be doing 62, 58, and 55. And I'd split my buys into 3. And that would give me the ability to at least get some part of a trading piece on, should we roll over here. Question is, what will make you deviate from your 150K thesis next year? That is a superb question. It's just really just seeing how Bitcoin reacts to ongoing news. So let's say if the Federal Reserve came out and does emergency interest rate cuts and the federal government does all these spending plans, I would expect everything to sell off at first and then start to rally. If Bitcoin didn't rally in that situation, I would be concerned. If there was a disconnect between the rest of the market and Bitcoin, I would be concerned. If the Federal Reserve said we're not cutting interest rates, and then the federal government said we're going to restrain spending, I would be concerned. Remember that Bitcoin is a call option on out-of-control government spending. And so if you think that out-of-control government spending is going to continue, then Bitcoin is the purest way to express that opinion in financial markets. And so I continue to believe that politicians will take the easy way out and they will spend. I also believe that central banks only know how to deal with one thing when things go bad, and that is some form of quantitative easing. So I guess that's my roundabout answer to that question. And then the other thing is, if we were getting near, let's say, June of next year, and we're nowhere near 150K, that would concern me. That would concern me. If we hadn't broken 6 figures by then I would have to readjust, and I'd have to say, okay, this is either not happening at the speed that we expected, or maybe we're not going to get the levels that we expect. And at that point, I would take action. I would probably advise my readers to start taking some money off the table, maybe 30 to 50% off, because by then we really should have dramatic action to the upside. Okay, that was a very good question, and it's one that I ask myself all the time. And friends, I'll leave this with you. We always, we have a viewpoint of the future, and we have a viewpoint of where we think things are going to go, but we also have to be open to the other side. We have to be open to thinking like, okay, what are the things that I'm going to look out for that'll tell me if maybe I'm wrong, or maybe this cycle will be a little bit different, or maybe we'll have to wait another cycle for that kind of prices. So, being that intellectually honest with yourself is difficult. It's certainly not easy. It's not easy for me, but it really is important to at least entertain ideas that are counter to your own, so you can be ahead of these changes should they take place. Great question. All right, friends, I want to thank you so much for tuning in today. It is a pleasure being here with you. I cannot wait to catch up with you next week. And remember, if you are not already receiving my free newsletter, please go to tawariresearchgroup.com Join up to my free newsletter. You're going to get all the details on this special event, special briefing that I'm having next Wednesday at 8 p.m. Eastern, where for the first time, the most non-political guy in the space is going to get political. And I'm going to make a prediction as to who will win, why I think they will win, and what I believe it will do to the crypto markets. All right, friends, thank you so much. As I always like to say, I want you to always remember, let the game come to you.
So that concludes today's episode. Thank you for listening. We'd love to hear your thoughts in the comments section. You can find the show notes on www.tikatiwari.com. If you found this episode helpful, please share it with others, talk about it on social media, and leave a rating and review. Don't forget to subscribe so that you never miss another episode. Thanks again, and we'll see you next time.